Welcome students. Today we discuss the topic is credit control measures. So எப்படிலாம் நம்ம வந்து credit control பண்ணணும் அப்படிங்கறத பார்க்கலாம். So creditனா நம்ம as usual பார்த்திருக்கோம். என்னன்னு தெரியும் உங்களுக்கு. creditனா என்னமா நமக்கு கடன் அப்படிங்கிறது உங்களுக்கு தெரிஞ்ச விஷயம். தானே? So அப்போ credit control measures அப்படிங்கும்போது இந்த credit எப்படிலாம் control பண்றது then அதோட measures தான் நம்ம இப்ப பார்க்கலாம். Okay. So first write the heading. Credit control measures. Okay. So credit control measures. The credit control is a primary mechanism available to the central banks to realize the objectives of monetary management. Okay. So primary mechanism. Primary mechanism available to the central banks to realize the objectives. To realize the objectives. Realize the objectives. Okay. So of monetary management. Then the RBI is much better placed than many of credit control. So RBI நம்மளுக்கு நிறைய credit controls பண்ணும். Okay. RBI much better placed of credit control. So the statutory basis for the control of the credit system by the Reserve Bank is embodied in the Reserve Bank of India Act 1934. So the Reserve Bank embodied the Reserve Bank of India Act 1934 and the Banking Regulation Act 1949. That's all. So the credit control measures, there are two measures. First one is general and selective measures. So first one is a general and selective measures. So general measures is a quantitative measures. Okay, ma? It's a quantitative measures. Then selective measures is a qualitative measures. That's all. So the general measures qualitative is divided into three categories. So first one is bank rate. Then second one is open market. Then third one is a variable cash reserve ratio. There are three quantitative measures of general. Then selective. So selective there are 6 qualitative. So first one is rationing of credit. Then second one is a direct action. Then third one is a moral cessation. Then fourth one is a publicity. Then fifth one is a regulation of consumer credit. Then sixth one, marginal requirements. That's all. there are 6 selective qualitative measures. Okay, then 3 வந்து general quantitative measures. That's all. So open market options ഉണ്ട് சரியா, open market options operations. That's all. Next one is methods of credit control. First நம்ம பார்த்தது இப்போ explain பண்றேமா. So methods of credit control. Credit control. So methods of credit control. First one is quantitative or general methods. Quantitative or general methods. So first method is a bank rate policy. Okay, so first method is a bank rate policy. So bank rate policy. So the bank rate is the rate at which the central bank of a country is prepared to rediscount the first class securities. Okay, so rediscount the first class securities. So it loans on approved securities to its members bank. Okay, then as the central bank is only the lender of the last resort, the bank rate is normally higher than the market rate. As the central bank only the render of the last resort, the bank rate is normally higher than the market rate. That's all. So for example, if the central bank wants to control credit, it will raise the bank rate. If the central bank wants to control credit, it will raise the bank rate. Okay. As a result, the deposit rate and other lending rates, the money market will go up. So borrowing will be discouraged. Borrowings will be discouraged and will lead to contraction of credit and vice versa. That's all. Okay, it's a bank rate policy. Then second one is a open market operations. Open market operations is in narrow sense and broad sense. Being two categories. So narrow sense and broad sense. Okay, so first narrow sense. So narrow sense, the central bank starts the purchase and sales of government securities in the money market. So narrow sense only government securities and bonds central bank start purchase and sale. The purchase and sale of government securities in the money market. Okay, then next one is a broad sense. Next one is a broad sense. So broad sense the central bank purchases and sells not only government securities but also other proper eligible securities. So நம்மளுக்கு வந்து government securities மட்டும் purchase and sales பண்ண மாட்டாங்கமா. So other proper eligible securities ஐயும் என்ன பண்ணுவாங்க, private concerns குள்ளதையும் நமக்கு purchase and sale பண்ணுவாங்க. Okay, so purchase and sells not only government securities, but also other proper eligible securities. Like bills and securities of private concerns. So bills and securities of private concerns. Okay, that's all. So when the banks and private individuals purchase and securities, they have to make payments for these securities to the central bank. So payment for these securities to the central bank. That's all. Then third one, variable reserve ratio. Okay, variable reserve ratio. Variable reserve ratio. So variable reserve ratio la first one enna appdi paapam. Idla vandu namakku vandu two categories are irukku. Okay ma, so variable reserve ratio la namakku two categories. So first one is cash reserve ratio. And the second one is a statutory liquidity ratio. So the two steps are namakku divide பண்ணிருக்காங்க. So adula first one வந்து cash reserve ratio. So cash reserve ratio la namakku enna varum appadina, so this method the central bank controls credit by changing the cash reserves ratio. So credit and changing, okay ma, so credit and changing credit by changing the cash reserves ratio. So for example, the commercial banks have excessive cash reserves on the basis of which they are creating too much of credit. This will be harmful for the larger interest rate. So nariya namakku interest irukku economic level la, so it will be raise the cash reserve ratio with the commercial banks are required to maintain with the central bank. So the interest namakku increase aguliyama, so adha maintain pandrathu the central bank oda main total. Okay, so raise the cash reserve ratio, which the commercial banks are required to maintain the central bank. Okay, that's all. Then when the central bank desires the commercial bank should increase the volume of credit. So increase the volume of credit in order to bring the economic revival in the economy. That's all. So that central bank is lower down the cash reserve ratio with a view to expand the lending capacity of the commercial banks. So lower down the cash reserves ratio. So expand the lending capacity. Expand the lending capacity. That's all of commercial banks. Next, the variable cash reserve ratio as an objective of monetary policy was first suggested. Monetary policy was first suggested J.M. Keynes. Yarma? J.M. Keynes. So it was first followed by Federal Reserve System. That first follow pannadhu yaru? First followed by Federal Reserve System in United States of America. So inga da first namakku follow pannuvanga. So the commercial banks as per the statute has to be maintained reserve based on their demand deposit and fixed deposit with the central bank is called as reserve cash reserve ratio. So the commercial banks as per statute has to be maintained. Statute has to maintain reserves based on their demand deposit and fixed deposit with central bank is called as cash reserve ratio. Okay, so cash reserve ratio. So the statute has to be maintained reserves based on the demand deposit and fixed deposit base பண்ணி நமக்கு maintain reserves பண்ணுச்சு அப்படினா central bank. So இதுதான் நம்ம என்ன சொல்லுவோம் cash reserve ratio அப்படின்னு சொல்லுவோம். Okay, so if the CRR, that means cash reserve ratio, is a high, commercial bank's capacity to create a credit will be less and will CRR is low. So நம்மளுக்கு credit will be less ஆச்சு அப்படினா credit will be less, CRR is low. So the commercial bank's capacity to create credit will be high. So நம்மளுக்கு capacity எப்படி இருக்கும் ஹையா இருக்கும் capacity high. That's all. So next one is a statutory liquidity ratio. So statutory liquidity ratio அப்படினா என்னன்னு second one, that means B. Okay, statutory liquidity ratio. So statutory liquidity ratio. So it means the amount which a bank has to maintain in the form of cash. Okay, gold or approved securities, etc. So statutory liquidity ratio, that means SLR, is the amount the bank has to maintain. எதெல்லாம் maintain பண்றாங்கமா maintain the form of cash. Okay, cash, gold or approved security. Approve ஆன securities மட்டும். Okay, so approved securities. That's all. So the quantum is specified as some percentage of the total demand and time liabilities. That is the liabilities of the bank which are payable and demand anytime. Okay, and those liabilities which are occurring 1 month's time to the maturity. So time எப்படி இருக்கணும் நமக்கு 1 month maturity கொடுத்திருப்பாங்க. Okay, 1 month time வந்து maturity of a bank. That's all. So next one is a quantitative or selective method of credit control. Next one is a second one, qualitative or selective method of credit control. qualitative selective method of credit control. So the qualitative or selective methods are directly towards the diversion of credit into a particular users or channels in the economy. Okay, so qualitative or selective method means the directed towards the divisions. Directed towards the diversion of credit into particular users or channels in the economy. Particular user or channels in the economy. That's all. So their objective is mainly to control and regulate the flow of credit into a particular industry. So main objectives நம்மளுக்கு என்னதுமா? Objective வந்து நம்மளுக்கு மெயினா எது வரும் அப்படின்னு பார்த்தோம் அப்படின்னா control, then and regulate the flow of credit. Flow of credit into particular industries. That's all. Okay. So next time, the frequent methods credit control la namakku nariya methods kuduthirukanga. So adu enna methods abingrada paathalam. Okay, first methods, rationing of credit. Rationing of credit. Second one, direct action. Then third one is moral persuasion. Then fourth one is method of publicity. Then fifth one, regulation of consumers' credit. Consumers' credit. Then sixth one is regulating the marginal requirements on security loans. So there are 6 selective methods. So first method is a rationing of capital. So first one is a rationing of capital. So rationing of capital. So this is the oldest method of credit control. So இதுதான் இருக்குதுலயே நமக்கு என்ன மெத்தட்மா oldest method of credit control. So the rationing of credit as instrument of credit control was first used by the Bank of England. So first used are England. First used by the Bank of England by the end of 18th century. 18th century la adu mudinjiruchu. So it aims to control the regulate the purpose for which credit is generated by commercial banks. So it is generally in 2 types. So iduve namakku 2 types irukuma. 2 types irukku. Okay. So first one is the variable portfolio ceiling. First one is the variable portfolio ceiling. Okay, so that refers to the system by which the central bank fixes ceiling. So central bank fixes ceiling or maximum amount of loans. So central bank fixes ceiling or maximum amount of loans. Amount of loans and advances. And advances for every commercial banks. That's all. Then second one is the variable capital asset ratio. The variable capital asset ratio. So it also refers to the system which the central bank fixes the ratio which the capital of the commercial bank. Okay, so fixes the ratio, which the capital of the commercial bank, which the capital of commercial bank. Commercial bank should have the total assets of the bank. Okay, Amma? So total asset of the bank. That's all. Then second one is a direct action. Second one is a direct action. So direct action against the earning banks can take following forms now. So first one is that the central bank may refuse the altogether grant discounting. Okay, so grant discounting facilities to such banks. Then second one is that the central bank may refers to and sanction further financial accommodation. So further financial accommodation on the bank, accommodation to the bank which exits borrowing or found to be excess to its capital and reserves. Okay, ma? So excess of its capital and reserves. Then third one, the central bank may start charging a panel rate of interest on money borrowed by the bank beyond the prescribed limit. So panel rate of interest on money borrowed by bank, on money borrowed by bank. Okay, that's all. Then third one is a moral succession. So this method frequently adopted by the central bank, isn't it, ma? So it exercises the control over the commercial banks. So control over the commercial banks. Control over the commercial banks. This method central bank gives advice then request. So advice then request. Okay, so and pursues the commercial banks that cooperate with the central bank in implementing in credit policies. So implementing its credit policies. That's all. Then fourth one is publicity. Fourth one is publicity. So central bank, in order to make their policies successful, so take a course of a medium publicity. So in every publicity, medium publicity. Medium publicity. A policy can effectively success only when the effective public opinion. So policy நம்மளுக்கு எப்படிமா இருக்கும் effective successful-ஆ இருந்துச்சு அப்படின்னா effective successful அப்படின்னா நம்மளுக்கு public opinion-உம் நம்மளுக்கு நல்லா இருக்கும். Public opinion is created in favor. Public opinion எப்படி இருக்குமா favor-ஆ இருக்கும். That's all. Then next fifth one, regulation of consumers credit. Regulation of consumers credit. So என்னென்ன regulations of consumer credit இருக்கும் அப்படின்னா, so down payment is raised and the number of installments reduced for the credit sales. So down payments நம்மளுக்கு எப்படி இருக்கும், ரைஸ் ஆகும்போது number of installments நம்மளுக்கு reduce ஆகும், isn't it மா? So down நம்மளுக்கு வந்து பேமெண்ட் நம்ம நிறைய கொடுத்தோம்னு வச்சுக்கோங்க, இப்போ ஒரு 10 months or 20 months கட்ட வேண்டியது, ஒரு 20 months கட்ட வேண்டிய இன்ஸ்டால்மெண்ட் அமௌண்ட்டை நீ வந்து ஒரு 10 monthsலயே ஃபினிஷ் பண்ணணும் அப்படின்னு நினைக்கிறேன். ஸோ அப்படி ஃபினிஷ் பண்ணும்போது அந்த 20 monthsக்கு நீ 5,000 பே பண்றேன்னு வச்சுக்கோ. இதே இது 10 months அப்படிங்கும் போது நீ கூட எவ்வளவு இருக்கணும் அப்படின்னா கூட 10,000 பே பண்ற மாதிரி இருக்கும். எக்ஸஸ் ஆஃப் 5,000 பே பண்ண அப்படின்னா உனக்கு இன்ஸ்டால்மெண்ட் வந்து எப்படி இருந்திருக்கும், குறையும் இல்லையா, இன்ஸ்டால்மெண்ட் வந்து ரெடியூஸ் ஆகும், ஆனா என்னது பேமெண்ட்ஸ் வந்து ரைஸ் ஆகும். ஓகே, சோ டவுன் பேமெண்ட் is raised, down payment is raised, then installments reduced. Okay, installments reduced, that's all. Then last one, changes in the marginal requirements. Changes in the marginal requirements on security loans. Security loans. So this system mostly yaar follow பண்றாங்க அப்படின்னா USA தான் follow பண்றாங்கமா. Okay, so this a broad governors of the Federal Reserve System. So it's a Federal Reserve System. So has been given the power of prospective margin requirement for the purpose of the preventing and excessive use of credit or stock exchange speculation. So stock exchange speculations, exchange speculation. This system is specially intended to the help of central bank and controlling the volume of credit used for speculation in securities under the Securities Exchange Act 1934. That's all. Okay, so it's a famous another thing about USA. Okay, that's all. Okay. Thank you, students. Thank you so much. So next class we will see.